Hey, what's up traders? Welcome back to my channel. My name is George, and in this video I'm going to share with you 4 tips how to minimize losses in Forex. However, before I dive into and share with you these 4 tips, the way you can minimize or avoid losses in Forex, I do want to mention one thing, especially if you're a beginner trader, you want to listen. So when you have a strategy, whatever, when you take the trade, everything might look very good. The setup might look perfect. The entry might be very good. The stop loss is in a very good place. Everything might look very perfect. However, trade might just not work out. Even everything looks perfect. The perfect setup, everything looks just great. The trade might not work out. The price might just go run your stop loss and then continue to your favorable direction, or just continue against it completely. But it's not because there's something wrong with your setup or something wrong with your entry or your stop loss or whatever that might be. It just sometimes the trade does not work out. So I want you to remember that. And I know and it happened to me before, that when I was a beginner trader, I was basically beating myself up in that oh, is something wrong with my strategy, with my setup, or is it something, maybe I placed my entry in the wrong place, maybe I should have placed it there, or maybe I had a wider stop loss, and all that, basically all this mind games. And yeah, just sometimes the trade just does not work out and you just forget about it and move on to the next trade. So when you backtest it and you're sure about your strategy or your setup, then you know that okay, this is just did not work out, and this is just a one trade, and it does not make a big difference over the 100 trades. And the tip number 1 is do not use too tight stop loss. This is definitely something I was guilty of. Pretty much most of the things I mentioned in my videos are pretty much done, most of it, using too tight stop loss. It might seem like a good idea because if you use a very tight stop loss and the trade works out, it gives you great risk rewards, and you can have the position size, it can be much bigger. But if you're using the tight stop losses all the time, then you are putting your risk to getting stopped out all the time, or at least most of the time. There are certainly times where you can put the stop losses very tight, where for instance the market conditions it's a low volatility markets, and it's not there are times when the market have this explosive move and it goes to like a very tight mode there. So in these times, then you can use the tight stop losses. And one thing is that you can't always apply the same stop loss in every currency. So if you want to use the 10 pips on every single currency, it's not a good idea. Because for example, you might get away with the 10 pips stop loss on a euro dollar. However, on the euro against Aussie, the 10 pips gonna be very, very tight. So it's always good to adjust and know your currency pairs as well. In my next video, I will share with you how to properly place a stop loss. So make sure to smash the subscribe and hit the notification, so when I upload the video, you will be notified. And the tip number 2 is do not place your stop loss on a random place. Of course, that's an obvious one, but many traders, they do still make these mistakes, or not necessarily make it, they still know it, they have to put the place, let's say, below support or above the resistance. But it's different when your emotions are involved, and then when the market starts moving and you're just looking, let's say you were waiting for the certain level for the market to come down, but it doesn't quite get there, maybe it starts to move quickly the direction you predicted, and you just jumping into the trade, and you see like, okay, it doesn't really my stop loss is not very good place, I want to still maybe extra whatever 5-10 pips, but it will be fine because the excitement, you don't think about it. When you get excited and the market is moving to your direction, you just want to jump into the trade and be part of the market excitement. But always put your stop loss where it makes sense. For instance, putting your stop losses below the support or above the resistance, where the price will find it challenging to come down to your stop loss and take you out. So if you put it some random place, the market is easily gonna come down or come up depending where the market is moving, and just run your stop loss down. So make sure you put your stop losses, let's say if it's below resistance or below some low, it could be a moving average or something that makes sense. Generally, in my personal experience, I place it somewhere below support or above the resistance. Never place your stop loss where it's just completely random. Of course, it depends if you're day trading, swing trading, scalp trading, and all that. But always place your stop loss somewhere where the market find it difficult or find it challenging to go past that barrier and take your stop loss out. Let's jump into the screen. I will quickly show you what I mean putting your stop loss in a random place. Right, so I pulled up this Euro USD, just using this one as an example. You can use any currency pairs, but I use this one in a 1 hourly time frame just to demonstrate. So that, for instance, that I thought that I want to sell, I'm going to short the Euro USD, let's say somewhere down here. Just an example. So obviously, if you put the stop loss somewhere up here, that will not be a good area to put your stop loss up here, because it's not really anywhere where you put the price might resist. So there's a good chance if you take the short in here, then you place your stop loss in here or even below down here, there's a good chance that the price will come up. In this case, they did not do it in this particular situation, but there's a good chance the price will come up and potentially maybe the price wants to take out this spike high or this high. We've got the multiples one in here. Obviously, of course, placing the stop loss up this level would be the best option, but sometimes it's not the option, because if you take the trade somewhere down here, it might not be good because the stop loss will be too wide. When you take the trade, you have to already incorporate that, okay, I'm going to take the trade in here and where my stop loss is going to be. So you can place your stop loss somewhere up here, but then obviously you have to know already in advance before you take the trade that, okay, I'm taking the trade in here, my stop loss is up here, that's, let's say, around 30 pips, and that's fine, and my risk reward is, let's say, 60 pips. Tip number 3 is don't place your stop loss in the obvious place. Okay, it sounds like I contradict myself, because placing your stop loss just below the support or above the resistance is an obvious place. However, we have to be smarter when it comes to placing our stop losses, because most of the traders, they place their stop losses just about below the support, about pip or two below support, or just about a couple of pips above the resistance. But it's good to give the extra room. Give it maybe 5 or 10 pips extra, or maybe even more depending on your strategy and how much your stop loss you're using and all that. But give it always the extra pip range, so just in case if the price decides to come down and take out all the stop losses which is just below this support or above that resistance, you will not get nicked. Because as you probably experienced and noticed, markets likes to make marginal highs or marginal lows, and the reason why is because if there are a lot of stop orders down to below that support or above that resistance, market will gravitate towards their orders. You need to remember the market's job is there to fulfill orders. Stop losses are orders, take profits are orders, and anything, whatever you place on that market is an order, and market's job is to fulfill their orders. And if there is enough volume in that same, or they're not far away that level, the market will gravitate toward the orders. And the tip number 4 is do not sell at support or buy at the resistance. I've seen so many traders, they make these mistakes. They buy it at the resistance level, they hope that it's gonna continue, but it turns around and completely goes against them. There is an exception. You can buy at the resistance or sell at the support. There certainly is an exception, and I do use that strategy when it's the right moment, and then I will show you on the screen when is the time to buy at the or near, not right at the resistance, or near at the resistance, or sell it near at the support level. And the only way you do that is if you believe that the price gonna break either support or resistance level, then you can do that. And I will show you how to identify that when the price, there's a high probability the price will break that support or resistance level. So we're going to jump into the screen and I'm going to demonstrate and give you the examples where you can waste the time that, okay, this is looks good, or it's a high probability the price will break that resistance or the support level. Okay, I pulled up the Euro USD again, but this time is a daily time frame. Just using this as demonstration purposes in terms of the buying near resistance. This is a bit further away from the resistance level, so I'm going to use these two highs in here as an example. But I'm hoping that you're going to get the idea what I mean in here. So when the price, so we got this resistance, and when the price came up to this resistance, you might think that, okay, the price maybe top out and it's going to continue to fall, maybe, you know, further down whenever it wants to go. But there are a few things we need to pay attention. For example, the price, so we had this nice pullback, this very long pullback. Keep in mind that this is a daily time frame. So we had this nice pullback, then the price came up. Look at these two candles. So this candle in here, which is very aggressive bullish candle, and we have also this spike. Generally, we just have the bullish in, I'm using this one as a bullish, normally the aggressive bullish candle. So this is strong bullish candle. Then we have the little pullback in here, and then followed by these two strong bullish candles, this one and this one. So these two bullish candles, that shows me that is very strong. There's a lot of strength coming in. There's a good chance that the price will continue to go higher. Of course, it will have a retracement, because that's what I'm hoping. That's where my strategy is based around the retracement. When the price is having a pullback, then I take the trade. And in this case, it had a couple of days pullback, and the obvious very good area to get in would be down at this level where this daily low is. Of course, we have some lows at this area, but they're further away rather than this one is the closest to this this date. This is further away, so the one which is closest, it's generally the stronger, and it's more reliable rather than what we got like a few weeks back around this whatever this is. Too many lows in here, so I'm not gonna cycle all of them. So we have, so this one of them is this one, and we also have these lows in here. And in this particular case, obviously you take the risk. Either you're gonna take in here the get onto the long side in here, or you're gonna go to the long side in here. Or of course you can take the trade in here and place the stop loss around down to this level. Then it covers this area as well, but obviously we're gonna have wider stop losses. So it doesn't matter these two potential for the entries, and we can see that the price has price case came down, tested this low, and then it just continued to towards upside. So I pay attention when it comes to the candles, how the candles are performing. I hardly ever use the indicators. I do like moving averages, but I don't use them as the most traders do. My analysis is based around obviously my strategy, but purely for the price action itself. And if I'm having a problem to identify the to read the markets, then I do include the moving averages, my personal choice in terms of to determine whether I want to trade this one and which direction I want to trade it. Before you click away, make sure to smash the like on this video and show some support. I really appreciate your support, as well as if you're new to this channel, smash the subscribe button. I upload new videos every single week. Also, you can join our Discord channel, which is completely free, where I share my trades, as well as you can interact with me and other members of our Discord community. Have a great day, and I will see you guys in my next video.